And so the questions that we had were related to special orders. And so these special orders can be complex because they have this idea of productive capacity and this idea of if we're looking at whether we're looking at profits or revenue. And so remember, I always recommend, and in the testing video I shared with everyone, test taking video, always read the end of the question first so we can figure out what we're being asked, because we get a lot of information here, right? And so I'd always read this first before I go through the details of assuming that we have a productive capacity of 16,000 units per year and we accept the offer, how will this decision affect our profit? So just reading at the bottom of this question, I know right away, hey, I am trying to figure out a special order because I'm comparing between two different orders, and I have a productive capacity limit that I have to be wary of. And then I can start pulling in all of this information. And so in the Google Sheets I shared with everyone on the first tab, you can see that, let's see, I put in not full production and full production because almost everyone in the class who's taken this similar question, this is just a similar question, assumed that we weren't at full production. So let's go over why this isn't right and then what is the correct answer. And so why this isn't right is because if we're not at full production, the special order isn't going to eat into our original sales. So the thought here is, and this is just information pulled. I'll put this side by side so we can all see. They're pulled from the question set. So we have sales of 16,000 units at $10. 16,000 units at $10, that's $160,000. They're direct materials and direct labor. These are relevant costs, right? Direct material and irrelevant costs because we can't control these. These have to be used. They're variable costs that have to be used to make more sales, right? So we always split out the variable versus non-variable components. Then we have our overhead, 20% that's variable. So I make sure I split out my fixed and my variable component. This is through the multiplication, the 80% times the 16,000, and I'm looking at D6, the 16,000 times 20% in order to get our variable and fixed components because we can't control the variable components, right? The selling and admin fixed, right? That's not going to go into our contribution margin because we can't, the fixed costs, they're set in stone. And then that results, the sum of all of this, so the sales less all of these costs result in our operating income. This is before we make our special decision. So if we are not at full production and we can decide to sell an additional 4,000 units, we can assess how that would impact our business. And so the way it would impact our business is our fixed costs shouldn't change unless it's explicitly stated in the question. And so here it says that our fixed costs increased our overhead by 600 and administrative costs by 300 in order to take the special order. So we'd add the 600 of fixed overhead and the 300 of selling and admin in order to get to a reduction of income. The special order is for less, and this is normal, right? If a customer reaches out and says, we'd like to do a bulk order, we normally will give them a bigger discount for that larger order. So they're getting it for less of a price. So that's 4,000 times $7.50. So we're getting less revenue per item. And then our variable costs are going to stay consistent with the pattern of variable costs, right? So the variable costs are going to stay $6 a unit for the 4,000, and our overhead variable is going to be 20 cents a unit for the 4,000. And so if we do all of this, we can find out our total costs. And if we take the new revenue, incremental revenue by the incremental costs, we get a $4,300 increase, which most people put this as the answer. This was a very difficult question, and it was intended to mislead you, to keep it difficult. The idea here is this is only if we're not at full production. But we are at full production in this question, right? It says our productive capacity is 16,000 units. And so for every unit of sales we make here, we cannot sell a product for $10 a unit, right? And so the question is here, how much money? So we can see here our answer to this calculation is here. It's E, but this would not be correct. The correct answer is calculated on this next tab. So you can all watch the math. And so the math here, we could go through all these complexities, but the real answer is we are going to lose out on $10,000 of revenue, right? We can sell 4,000 units at a higher price here. We can sell the 4,000 units at $10 a unit. So we're losing out on $2.50 of revenue. So instantly, I'm going to already say, I'm not going to make this decision because I can sell these units for a higher price to other customers. So we should already know right off the bat that if I can sell these units to other customers for a higher price, it's going to be a decrease in revenue. But not only that, we also have these increased fixed costs, right? These increased fixed costs will go into the decrease of about $900. And so our answer will actually be B for this. That's $10,900 decrease. So just be careful with the production, right? And hopefully this makes sense that we can take our sales in general make $10 a unit, and we can't make more. Our factory can't make more than that 16,000 units. So we really have to be careful when making these decisions of special orders. It might sound great that we have this 4,000 unit order coming in that we can make some profit on, but it might make more sense. In this case, it does make more sense to decline that order, right? And so similar question related to that I had. So this is another example. Is Bluebird Manufacturing has received a special one-time order of 15,000 bird feeders at a $3 per unit. We can read through all these fact sets, but what I always teach, right, is read the last line first. And so the last line is, if Bluebird accepts the additional business, what is the incremental revenue? And so here's the trick. We're not talking about profit anymore. I know right away, we're talking about incremental revenue. So we get this huge fact set of all with variable costs, but we don't need cost information in order to figure out revenue, right? Revenue is top line. And so if we accept this additional business, what is our incremental revenue? This is an easy calculation, and I put it right here. We just take the $15,000 times 3, and that's our incremental revenue. Right. That's it. You don't need to go farther in this question. And so this is a good example of your critical thinking skills, testing yourself to make sure that you're reading for the relevant information and how you could do better on your tests going forward, right? And I will put questions like this on your quizzes and tests where I will be testing your critical thinking skills, where you could spend 10 minutes on this question going through the calculations when it was really a 1-minute question. So always be careful to read what the question is asking for you first. Another note here, I just want to say that there are these easier ways to make calculations, right? These calculations are pretty hefty, especially when you're about to do an exam or when you're expecting for exam. So remember the trick of contribution margin. So contribution margin is just, what is our contribution margin? Our contribution margin is just our sales minus our variable cost. We exclude the fixed costs. And so another way to calculate our original question is just to figure out our contribution margin per unit. So up here, we knew our variable costs. We calculated it out. So that the $750 for the special order minus these variable costs would have been our contribution margin per unit of $1.30. And then if we multiply that by the new units, we get our total contribution margin for the special order. And then if we subtract out the fixed costs, we can get our operating income increase. This is a quicker calculation if we just remember how we did contribution margins in earlier chapters. And so I'll pause there for any questions related to this. This is special orders. So big takeaways, right? The big takeaways are, always remember, if we're at production, we have to go under a different decision matrix, right? If we're at our productivity, we can't make any more. We're always going to assume to take the higher sales and higher net income for our decision. Second takeaway is always read the question first, the last line of the question first, so we understand what's being asked and that revenue and profit are different. So I will stop sharing here and let's just